Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is in a very strong uptrend. What we can notice is that we had the creation of multiple monthly higher highs and higher lows, and all this uptrend has been fueled by very strong institutional buying. And we will be speaking about institutional buying in just a few moments when we look at the positions of the non-commercials, so the big players in the market. But for now, let's keep in mind that on the monthly, we definitely still are in an uptrend. The next logical step would be to see first a correction and then the continuation to the upside, because that is the definition of an uptrend. When the market is in an uptrend, you expect the creation of higher highs and higher lows, with every time new institutional buyers entering after a correction. Now, what we can also notice here on the monthly time frame is that development of this uptrend is coming as a rejection away from a strong historical structure level. In fact, we had this previous level of resistance which held as resistance for definitely few years. Every single time the market tested its zone, it immediately rejected it to the downside. Now we got the breakout to the upside away from the zone, the retest, and now the uptrend is being developed after the break and retest from this historical structure zone. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, also here the patterns that the market has been creating are quite clear. We can notice that we first had this strong move to the upside, then we had this consolidation in the form of a triangle formation, in which essentially we had a wedge being formed, which is also referred to as a triangle formation. It pretty much is the same exact concept. Basically, you're getting lower highs and higher lows at the same time, and then the market broke out to the upside. This is a very popular pattern. You get the impulse, then you get the consolidation in the form of a triangle formation, and then you get the breakout to the upside, which is exactly what the market gave us here. And the uptrend that is being developed here from a weekly standpoint, so the creation of these weekly higher highs and higher lows, is coming away from this breakout. The last step here from a weekly perspective was the creation of this impulse and now correction. And now the market seems ready for more potential bullish continuation. Now, if we have an impulse like this one here, and we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse zone. And we can notice how the market has retraced exactly to the area in between the 50% and 0.618 retracements. Now, why has the area stopped exactly in between the 50% and 0.618? Because usually the market retraces to the area which is in a confluence of support zone. Now, in this case, that was precisely the case, because what we can notice is that exactly from this zone, the previous rejection to the downside started. So this was previous weekly resistance turned support from a structure perspective, and also we had the 50% and 0.618 retracements. And inside of a confluence of support zone, which means that it basically confluence of support is when you have multiple layers of support lining up in the same area of price, you have an increased probability of seeing institutional buying inside of the zone, which again, we will be speaking about in just a few moments. But for now, let's keep all of this in mind and drop down on the daily time frame. From a daily perspective, the situation is very clear as well. I did speak about gold just few days ago when the market was testing this zone, and I explained all the reasons for which I was expecting this rejection to the upside, which is in fact exactly what the market gave us. And then again, when the market was testing this previous resistance zone, I made another breakdown explaining all the reasons for which I was expecting this correction, which again is exactly what the market just gave us. And by the way, I will link in description these two previous analyses, so you can go and check them out for more free education. But at the moment, what kind of structure we have? Well, before we dig deeper here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing on gold. Now, what we can see here is that in the long term, there is no doubt that institutions are positioned to the bullish side for gold. We're sitting with 237,000 longs compared to only 74,000 shorts. However, in the very short term, net positions have been decreased. We went from 202K down to 162K net positions. So we had a decrease of net positions. Now, if we look even into more details, what we can see is that institutions were even adding shorts for a couple of reports together with closing their longs. And it comes as no surprise that given this institutional shorting and closing of longs, the market has been quite weak. However, what we have to notice now is that institutions have now started closing the shorts that they had added. They haven't yet started opening longs, so they're still taking profits on the huge longs that they had throughout all this move to the upside. Now, if they will start adding longs again, at that point, I definitely would expect more bullish continuation, in my opinion, because in a situation like this, where they start closing their shorts, they're already positioned in the long term to the bullish side and they start adding even more longs. In my opinion, there is an increased probability of seeing more bullish continuation. So it's very important to see how many longs will be added and if they will be added with the new report. But it definitely seems possible now that shorts are getting closed once again. So let's move back to the chart and keep that in mind. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, we have a market which is at a quite strong level. All this zone was previous resistance turned support here, again here, and at the moment it is still acting as support. If the market will go and create a deeper test of this area, so it will go lower, really testing what kind of demand there is inside of the zone, and we see that with the new report, institutions are adding longs, at that point, what would I expect? Well, as usual, trading is reactive and not predictive, as my students know very well. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside fueled by that institutional longing. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed.
And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.